In the metals quadrant, taking a look at the December gold contract, which had a down day, a little bit less than 1/3 of 1% at the close, down right around 1756 or so. The low was only 1752. That was down about 55 basis points. We're down 2 of the last 3 sessions now. With taking today into consideration, the week has now turned negative. We did go up 1/3 of 1% on the highs. 1767.70 was that high, but again, turned around later in the day and finished lower. The debt ceiling agreement, the debt limit agreement, pushed yields higher, and that helped take some of the shine off of gold later in the day. They didn't really announce details of the agreement till about the middle of the trading day. Early in the morning, though, there was talk within the news agencies and on the wires that there had been an agreement reached. There was an offer presented by Mitch McConnell that the Democrats were going to accept, and this started to weaken that gold bid that we saw up near the highs. And then when the full agreement was announced, even though it is only 3 months long, it took some of the pressure off. Yields actually rose a little bit in toward that, but gold started to fall off. Again, those higher yields kind of assuring that the Fed would taper and that there wouldn't necessarily be an interruption to that. So that's some of the weakness we saw in gold. Not really that interesting from a fundamental perspective, but that's just the way that the market traded today. Then we are also entering a seasonally weak period for gold. As we get into the second, even the third week of October, there's a very steep drop off in the seasonal value of gold. Doesn't mean that gold has to go down, but it'll be getting a headwind from its seasonality. And that's sort of a precursor to the seasonal strength that we get going into the holiday season. But today, down about 1/3 of 1%, 2 of the last 3 sessions lower, and working on a negative week, only by a little, but still working on it as we speak.